everyone, it's Kenton Becker, American Pacific Mortgage. I'm here again with another weekly video tip for you. We're continuing on this series titled What to Know When. This week's tip is about renovating a home. Now there's a couple things when it comes to renovating a home. Are we talking about renovating a home that you're purchasing or renovating a home that you already own? First, I want to start with purchasing. If you're looking to buy a home and it needs some renovation work done to it, you're going to be looking at a couple different loan options. FHA has their own loan option, which is called the 203K loan. And then conventional financing has their own option, which is called the Homestyle renovation loan. The FHA 203K loan comes in two different sizes, a small, or they call it their streamlined size, which is more for renovation work that's less than $35,000. Then they have their standard 203K, which gets into much larger projects. You can almost have an unlimited amount, Then conventional's Homestyle renovation loan also does not have a maximum amount. This is more for larger projects, maybe even structural repairs. And so the conventional Homestyle renovation loan will allow bigger projects as well. Both the FHA and the conventional loan have some minimum down payment requirements. FHA's minimum down payment is 3.5%. Conventional's minimum down payment is 3%. So how does this work on a purchase though? Well, it's pretty simple. Let's just say that you're buying a home for $300,000. And let's say that you need a $100,000 renovation budget. Well, you're gonna get a loan for $400,000 then, which is enough to cover the $300,000 home and $100,000 left over to cover your renovation. So that $400,000 loan, you have to make sure that the home's appraisal value will support a loan of $400,000. Fortunately, the appraisers are able to give us a future appraisal value. So it's not based on the current $300,000 home's value. It's based on after the work that you're doing to the home. So once you put that $100,000 worth of renovation work into it, what will the value be after repairs? That's called a future appraisal value. As long as that future appraisal value will be either at or greater than the loan that you need, you can finance in all those repairs. Now, what are some downsides to the renovation loan? I guess the number one thing is it adds some stress. Anytime you're renovating a home, you're doing a remodel project, there's some extra stress that goes into it. The other thing that's kind of a downside is during the renovation work, depending on what it is, you're really not able to live there. You can't live in a construction zone when they're tearing out walls and they're doing a bunch of stuff with contractors. And that does become a little bit of a timing challenge because renovation projects can many times have a window of time that it takes, like 4 to 6 months. And that can be a challenge many times when you have a specific date you need to be out of your rental or out of your lease. If there's delays on your renovation, and you have to be out of your current apartment or your current rental, those two dates may conflict with each other. So that's some bad things about renovation, but the good things about renovation are that you can walk into some instant equity. Many times if you're getting a home that is in really bad shape, it needs a lot of repairs, a lot of times those homes are undervalued to begin with. So once you put in some renovation work into it, that value many times will go up not only at a higher value, but even beyond what you're borrowing. So there could be some opportunity for even more equity in your home. Not to mention you're turning a home into exactly what you want it to be, that exact kitchen you want, that exact bathroom you want. So there's some benefits to renovating a home just for something that is yours, that you designed and had remodeled the way you want it. The second thing that you can do with renovating, and we kind of touched on this a couple weeks ago, is with a refinance. There are a couple ways you can do this. With a cash out refinance where you can go up to 80% of the home's value, pull that cash out, and then just renovate the home at your leisure. However you want to do it, whatever you want to use that money for, however long it takes, it's your money, you can do what you want with it. Then there's the other way of actually using a renovation loan in a refinance. So let's say you don't quite have enough equity to really take out enough cash that you need to move forward with the renovation project. Well, you can do the renovation loan and actually get a bid from a contractor that will show how much that would increase the value of the home. And as long as it increases the value enough, just like a purchase in a way, you can take out that additional money for your renovation budget. So there are a couple different options of how you can renovate a home if you already own it. Talk to me if you have any questions on this, comment below or shoot me an email or phone call. So thanks so much for joining me on this week's tip. Have a great week.